Welcome everyone to what episode is this? I missed. I always forget the number.
I actually have forgotten too. Give
Okay,
me 1 second.
okay, that's good. That's good. Well, welcome to episode 105th of the Intersection 4 podcast. You have your usual three hosts here. You have Hamiz, investor. You have Brendan, the founder, and you have me, the philosopher. But I have some interesting news to share. And today we start. Yeah, today we start the topics with some news that I want to share. So by the time that this podcast goes live, I will no longer be working at Google. And I will be starting my own company alongside with a co-founder doing decentralized AI data. So if you go back to the last episode, you'll see a lot of the foundational ideas and thesis and philosophy that are underpinning this new company. The company is called Eidon AI, EIDON. And yeah, we're starting now, focusing on decentralized AI data, and excited for the journey. So it will be a fun ride, and you guys are going to be hearing more about some of those ideas here on the pod.
Can you give maybe one more one-liner just to make sure people heard it? So decentralized data. Can you maybe expand one more?
Yeah, 100%. It's going to be decentralized AI data. The decentralization piece just basically means anybody can post data to this network, and the ownership of the data stays with the person who submitted the data, and then the auditability of that ownership is open. So there's nobody saying you own your data or you don't own your data. There's a system that is tracking ownership in a decentralized way.
Yeah.
And then it's a decentralized AI data marketplace. By AI data, which is basically mean multimodal data. So there's going to be text, audio, video, images, and so on. And then the marketplace is simply like any other marketplace, right? We have suppliers, we have consumers. So that's the problems that we're going after, trying to empower a lot of people to monetize their data and own their data and own the future of AI that way.
Okay.
It's an exciting...
closest...
Yeah, go on.
Go ahead, Brendan. Go ahead.
I was going to say, it's an exciting time for you to be announcing this, because I think we recently saw a company that I used to work at, Scale, just did a $1 billion round at a $13 billion valuation, maybe slightly more, and they're effectively building an equivalence factor in a non-decentralized way. So there's no ownership of that data. So there's a clear market pull that, we've seen in our group over the last couple of years, and now probably more publicly, people are noticing that this is truly the oil to all the models that are out there. So kudos, man. This is going to be exciting. This clear market.
Thank you. It's going to be a fun journey. The team is really strong, and we're actively hiring. So I guess we'll just leave in the description some of the roles that we're hiring for right now. So if anybody wants to join us, feel free to apply, and let's build the future of AI data. One thing that I would mention though on the Scale AI raise, it's actually really interesting to see kind of like this problem, the problem set coming up. I like to think of PMF, and I think the All In Pod mentioned this a couple episodes ago, but I like to think of PMF too. They conceptualize this very well, but I think product market fit has two vectors to it. One is directionality, and the other one is precision. Directionality basically means big trends. So where is the market moving? Like to give an example, betting on mobile in the early 2010s was like directionally correct. But then the precision vector is basically, is your approach the right approach to solve the problem that you're going after? And that's what we're going to go find out. But I think there's a lot of interesting directionality signals pointing towards the problem set, as Brendan was mentioning.
So when you think about directionality and the signals, who is that from? Is that from the customer or the investors?
Yeah, I think mainly customers, and mainly I think it's a collection, right? I think it's not necessarily any one given entity, but it's the market as a whole. And the market is made of investors. The market is made of founders tackling problems. The market is made of consumers. So I think it's a collection of sentiment, I would say.
Because being an investor, I can tell you that investors have no idea. And it should always be driven. The signal should always be driven by your paying customer.
100%.
And the investors should be following that signal and reading that signal, but they should not be driving it.
100%. Okay. Announcement is done. And I think that's also interesting because when it comes to the pod, there were a few things in the past that I kind of like refrained from commenting on. But now I am unleashed.
There we go.
So now I'm gonna be.
We're all converging into some sort of like mold of the three of us.
That's right.
And I actually know who our fourth member is going to be for Intersection 4. It'll be an AI, right? Like it has to be, right?
That's perfect. Yeah.
No, that's awesome. So what's the closest you would think Sam competitor to Adon?
Yeah, so there's a couple guys in crypto doing similar things, and every approach has their own merit. But I think Brendan just mentioned probably the biggest competitor in like the broad market outside of the crypto context. I think definitely Scaling has a lot of synergy and a lot of momentum around this. But yeah, we're going with a different approach, and we're betting on decentralization and people's desires to monetize their own data and own their own data.
So, Brendan, like one of the arguments that I hear all the time, and not even just the argument, but one of the reasons that investors may have missed Scale AI is that they would put it in the bucket of, oh, that feels too much like a services company. It's not a very scalable, business that they're in. Maybe Sam will get the same kind of questions. How did you categorize it? Like, was it really a managed product company, a services company, actually a product company? Like, how would you have categorized that?
Yeah, I mean, it was a services company in like the strict sense of like humans were the labor. What they found and what Uber found and like Airbnb found is there's probably some instantiation of like giving someone a fixed piece of work that's easily verifiable, that's cheap, that's repeatable, and then you just scale that. That's why software is great, because it scales and you don't have to ask, is it going to scale? You know, like structurally it's going to scale. Humans, we've never been able to do that. So I think there's like very few businesses where you would call them like a technology business or a product-led business that actually scales regardless of the fact that it's human scaling or software scaling. Figuring out what those are is the hard part though. So I'm sure early on it didn't feel like this business could scale, and nowadays, it can. But they did a pretty good job the entire time giving off this sentiment that they weren't a human-led business. Like it looks like a technology company, it acts like a technology company. It's actually kind of hard to figure out that it's the Amazon Turk model under the hood.
Would you pay $13 billion for a technology services company?
I mean, dude, look at all.
Not when you say it like that. Not when you say technology services company. But I pay $13 billion for a workforce that is cheap labor, and in a world where there's very few things that are going to move the needle in AI, this could be one of the three needle moving mechanisms, probably. Yeah.
Yeah, and I guess just consider some of the really big consulting companies and some of the really big professional services companies like Accenture.
I know, but they trade
$100 million.
I know, but they'll trade at a very different multiple to their product counterparts. So 13 billion is not a lot. I agree. There's consulting firms that are bigger than that, but they don't trade at the same multiples. And so are investors like applying the right multiple to Scale AI, or are we paying 1,000 times whatever net income for a service?
Well, we just went through this, right, with NVIDIA. The same people have the same reservations about a company that, WeWork is like the opposite. But it is, but it's to the point that Hamiz is making. Yeah. But it's like, okay, people know software scales. They bet at these crazy multiples. Hardware, they don't like doing that. Services business, they don't like doing that. But there's these like Easter eggs where it does work, and it somehow NVIDIA has found a way to like continue to grow at these crazy rates, and things get expensive, and they're eating that up. So yeah, it works until it doesn't, and it doesn't until it does.
Yeah, like actually one of the, maybe this is good clarification, the two of you might already know this, but when you see a big raise like that, a lot of people assume that the price the investors paid was 13 billion, But really, the price the investors paid in a bad scenario is $1 billion. Because they're always above the common stockholders, right? So as long as Scale AI sells for $1 billion or more, these investors will get all of their money back. So that's why, like, you can give me any valuation you want, and I can structure the rest of the deal in a way that it's fine for me too. And that's why, like, focusing on the valuation is not necessarily the right thing to do, because if you give it to a creative like investor, and I like to think we're pretty creative, like, we'll give you the valuation you want. You want 13, you want 26. What do you want? You want 26? We'll give you 26, but we'll do things on the back end that we're not paying. Yeah, we're not paying 26. Like, we're paying like $1 billion.
I think it's an interesting question.
The OpenAI Microsoft deal. That's a $90 billion deal, and none of that actually got like the amount of money they probably transferred over. Maybe of the 10 billion, was it 10 billion?
Yeah.
They probably only moved like a couple hundred mil.
Yeah.
If that. And the rest was tied up in infrastructure that like they didn't even have to transfer.
I think this is an interesting question, and maybe we can linger on this for just a little more and move on to the next subject here. But I'm curious, both from the investor perspective and then from the founder perspective, when do you cross a threshold at which your company is unsellable? So you raise at such a valuation that the only way out is public. Like, I think that actually during 2021, I think this happened with a lot of companies, right? A lot of companies, especially in fintech, a lot of companies raise at like tens of billions of dollars. Who's going to buy them for that amount, right? So you either sell for a significant discount from what you raise, or you go public. But when do you cross the threshold? When does a company become unsellable?
Well, obviously, when it gets to the billions, it becomes basically no company is unsellable, really. But the universe of potential buyers gets very small very quickly, right? Yeah. So if the last valuation, or actually that's the point that I was trying to make, is the last valuation doesn't really matter to the investor. It's the total amount of capital that has gone in that matters a lot more. So let's say you've raised at a $50 million valuation, but if you only raised $500,000, I'll be ecstatic if you sell for half a million. I'll get all my money back, right? Now the founders won't get anything, but I'll get all my money back, right? So it should actually be not the valuation, but the amount of capital raised. And I think obviously when you're less than 10 million raised, the number of people that can buy you is just ginormous, right? There's thousands of people who can buy you. But I think as soon as you go over 100 million raised, $1 billion raised, tens of billions raised, it's like one or two people in the world that fit like the right amount of capital, the right availability, the right interest. And so that's when it starts to become like very, very difficult to sell.
Okay. The other fun example is like the Mosaic ML deal. Like, yeah, it was $1 billion acquisition, but how much of that was like a stock swap into Databricks? Right. I'm sure like they made out fine, but it looks like $1 billion acquisition. Under the hood, it could be the $1 billion acquisition at the Databricks 2022 valuation peak ZERP. Like, what is that today? 600 maybe.
Yeah, so optimizing for valuation is not a good idea for most founders.
Yeah.
Okay,
let me put a pin here. Let's move on. I notice, you're in a bit of a different space that looks like a hotel room. So tell us a little bit more. Where are you? Why are you there? What are you learning? And do we need to come save you?
No, you're good. I am at a conference in Vegas focused on derivatives and multi-strategy funds. So this is like very traditional TradFi. But what's happening, which is quite interesting, is that they're starting to see the crypto markets as like a new commodities market. These are the derivatives guys that like trade volatility, trade variance, trade all the Greeks. And so when they look at blockchain, like they kind of, I think, zone out all of the technology. They just see something that trades, right? And they're good at that. And so they're like, oh, how can I trade it? How can I sell the vol? How can I buy the vol? Things like that. So it's been interesting. I've been to this conference before as well, but I'll tell you the big differences. So one, last time the ETF wasn't there. So the legitimacy was very different. Now the ETF is there. All the big banks are here, like all the big trading firms in the world, the Citadels, the Susquehanna, like they're all here. they're a big part of obviously this ecosystem. They're all talking about this stuff. The second big difference is that they're now talking about AI as well.
They're not, or they are?
They are. They're very much talking about AI as well. Every business, every data company here, they're talking about it. All the trading firms are talking about it. And so those are the two big differences, is that now we have a ETF approved and another one probably getting approved today, and you have AI as part of the conversation.
I remember seeing an interesting, like it makes sense, right? Like there's just volatility of an asset that's trading, and it makes sense for just professional traders to get on the action. I remember, I can't find this. I was trying to look for this, but I can't find this graph right now. But it's really funny. Like there was a graph a couple months ago circulating on Twitter that was comparing the performance returns of meme coins compared to any other asset class, and it was something just. I mean, of course, it's not sustainable. It's stupid, but like for a good trader who knows how to trade risk, who knows how to position themselves in like low liquidity, extremely volatile assets, you made a killing at the beginning of this year trading meme coins and getting on and off. But I think you make a good point here. And this segues really well into one of the topics that we have today in the agenda, which is it seems like there's more legitimacy right now in the markets. And there's a ton of stuff happening with the crypto markets right now from a regulatory standpoint and also legitimacy standpoint, I guess you could say. So I think there's three things that are just happening this week that I just want to highlight. So one was that the House approved FIT 21. There's a ton of progress happening in crypto regulation. And interestingly enough, maybe today, as we record this, the Ethereum ETF is going to get approved, or maybe it's going to get rejected. But it seems like the sentiment is shifting towards an approval of the Ethereum ETF. And on top of that, we also had the Bitcoin ETF getting approved a while back. So, Hamis, I want to get your thoughts here. As an investor, like, what does this tell you for the crypto market, for the future of regulation in the US of crypto? I have a couple of thoughts here that I'm going to share later on, but I want to get your investor perspective first.
Yeah, so it was really fascinating that Mark Cuban was pointing out to the Democrats. Did you guys see the tweet where Mark Cuban is like, "You're going to lose this election because of how you're treating crypto"? And I was like, I never imagined 10 years ago, right, that you'd have billionaires coming out and saying, oh, because 10 years ago when we started looking at this stuff, it was like this weird little thing that only the computer nerds used to talk about. And I never thought that in 10 years the entire elections apparently are going to be based off of like how you regulate this thing. So first of all, like we've come a very long way. Like things are very, very different now. And it actually made an impact because Brendan obviously probably doesn't follow this, but like a week ago, if you told me an ETF was going to get approved, like in Ethereum, I was like, no chance, not in 1,000 years. And then apparently they did like a complete 180, and it was all politically driven because Trump came out, the Trump campaign came out and said, we're accepting crypto as contributions, and we're going to build a crypto army or something, right? Because he's smart, right? Like he plays the opposite side. So he knows that there's some group of people in the US that he can attract if he says, hey, I'm crypto friendly. Whether he is or not is like a different question. And immediately that happened. And these regulators who are supposed to be these independent, like people that don't listen to what's happening in politics, literally overnight completely shifted like the entire focus and said, yeah, you know what? Actually, we are going to approve that thing. It is so corrupt. It's so ridiculous, right?
That I don't think it's corrupt. I don't think corrupt is the word here. I think it's very narrative driven. This Senator Cynthia Lummis, she has been a very vocal supporter of crypto for a very long time. And I guess just to contextualize the listener, if you haven't been following the crypto space or you have been really paying attention to AI lately, a quick overview of crypto regulation and crypto sentiment in Washington over the last few months. So Senator Warren has been very vocally anti-crypto, and Senator Warren has been the SEC. Let's just say the SEC. I'm not going to call on Senator Warren. She has been very vocally anti-crypto, but the SEC itself has been on a crusade for the last several months, chasing every single crypto company, serving Wells notice left and right to companies that are doing innovation businesses that they're legit, that are innovating many aspects of the financial system. So Senator Warren came up with this sentiment of like, we're building an anti-crypto army in Congress.
No, she said it. It wasn't just. It wasn't a sentiment. She like said it. It was like a whole campaign thing she was doing.
Yeah, it was her
ridiculous.
thing. So she picked the anti-crypto side. And a few proposers of crypto in Congress, particularly Senator Loomis, have been very vocally supporting crypto recently. But I think things really turn around. Things really turn around when Trump began actually being a lot more vocal about his support for crypto.
You have to love Trump for this.
Yeah. Frankly, like, very smart. How much he cares about crypto or not is beyond the point. But he saw, in his political savviness, he saw an opportunity. A very strong group of people, like 50 million people in the US, that hold crypto and care about crypto. They may not be single issue voters, but maybe a few of those are single issue voters. And that's strong enough to swing elections in favor of a given candidate or another. So Senator Trump very savvily jump on this, and a lot of the leaders in the crypto space, like Ryan Selk is the founder of Messari, has been doing a lot of work in policy for a very long time, but he became a lot more vocal over the last few weeks around supporting crypto and supporting pro crypto candidates, including Trump, Senator Cynthia Lummis, and so on. And then all of this coincided with FIT 21. Without getting into too much detail about what the bill itself was proposing, because I may end up blundering something here, and I don't want to be communicating wrong information here or what have you. But in a very simple way, it was a very pro crypto stance on regulation. It was proposed, I believe, by Republican senators, and a few days ago, President Biden and his office threatened to veto it if it was passed in Congress. And all of this mobilization happened. Trump came out in favor of crypto. A lot of senators started to go towards crypto, and even a lot of Democratic representatives started to also show support for crypto. This was voted on, I believe, at the beginning of this week. And these were the results. So the vast majority of Republicans in the House voted yes, and a very strong number of Democrats, actually, sorry, this is a different bill, but a very strong amount of Democratic representatives also voted yes.
No, you're right.
This is a different bill, actually.
Yeah, this is a different bill.
This is
I know what you're
CBDC
talking
bill.
about.
Yeah, but I'm trying to look for the actual vote. It's probably somewhere here. It happened a couple of days ago.
But I'll tell you why I'm calling it corrupt, right? Is because when they speak about this, they talk about it in trying to make you feel like they have some logic behind the whole thing. Oh, this is why we're doing it, and we're trying to protect these people, and this is the bad stuff that happens. But on a dime, if their political future is at risk, like, it doesn't take them weeks to rethink it. It doesn't take them months. It takes them one day, and they rethink everything. That's why the system is like that. That's why I called it corrupt, is because it's all self-interest driven. Nobody actually cares. And nobody's like, the logic that they laid out was protecting the investors was obviously not a logic they care about.
I think that's a cynic take on politics. I think politicians, I'm not trying to defend politicians here, but I think politicians need to respond to the sentiment of their constituents. And a lot of crypto advocacy groups try to rally a lot of support, gather a lot of signatures from companies in the US, and send this to the representatives of their respective states, saying, hey, we are your constituents. We want this. Like, we want support for crypto because we care about this. And I think it's a response of politicians to react, right? Whether you're a Democratic or you're a Republican.
But at least pretend that you're thinking through the actual logic behind it, because they pretend that they're thinking through the logic, like when they're opposing it. So then you can I don't disagree. Like, of course there are employees, like, they're supposed to listen to us. That's the right thing to do. But the same way that they go on these speeches and try to explain the logic when they oppose it, they need to at least pretend that they're doing some sort of thinking when they start supporting it. Because otherwise you're just saying, oh, anything with enough support could be passed, right? Like,
that's a democracy.
I'd like to, but I know, but I'd like to think that there's some thought going into it, and clearly there's not. This is all just self-interest driven.
Yeah, I think we're saying the same thing. I think we're just interpreting it in a different way. I think politicians don't really have the time or the bandwidth to assess every single thing that comes. That's why they have staffers, and if the staffers sense that the sentiment from their constituents is changing, they're going to change their votes. And this is actually the result of the vote that I was sharing, that I was looking for. And it was historic. Like a lot of Democratic representatives were likely to vote no against this bill maybe a week ago. And then when the vote came around, 71 Democratic representatives voted yes. And that's a massive and unexpected win for crypto in the House. Brendan, any thoughts here? Does this matter at all to you? Like from a founder standpoint, does this make crypto more legitimate in the eyes of people building stuff, or is it just it's just politics? Doesn't really matter.
Financial engineering. That's all I think about. That's it.
Yeah.
Don't you think there's a regulation coming for AI as well, Brendan? There probably is, right?
Is there? What did you say? Is there? Or there is?
Don't you think there's regulation coming for AI as well?
Yeah. Short answer, yes. I don't think either side knows which way they want to regulate it.
Mm-hmm.
Right. I think they're basically doing I think of when someone buys software, they go on their fact finding mission where they go out all the vendors give the pitches, and then they're like, okay, we know what we want now we can go procure. I think the government's in fact finding mode. They're like, do we like it? Do we not like it? Is it gonna help us? Do we want to regulate it? Do we want this to be pushed onto the bigger companies? Do we want this to be a small business initiative? I don't think they really fully recognize that they like it or not like it. I just know that they don't like that China is doing well. That's what we all can get behind is they're okay, China AI, we got to be ahead. But what does ahead mean? Does that mean regulation? I don't know.
I think that's been a similar discussion for crypto regulation.
Mm-hmm.
And it's very much driven by the threat of a lot of talent and innovation going offshore. And it just took Congress a long time to respond to that. But I think this shows me two things.
It was clear early that the U.S. had a chokehold on the financial system of the world.
Mm-hmm.
And this was a disruptor. I don't think you would argue that the U.S. has an equivalence in the AI space. So they're do we want to let this thing prosper? Because we can, let that prosper internally. Whereas it felt only downside if you were to take a cynic's view of crypto is we already run the financial system. Why do we want to introduce this new player that we don't have control over?
Mm-hmm. Mm-hmm.
Yeah.
Maybe not.
I think it's going to be a similar. My take is that it's going to be a similar cycle with AI. It's going to take time for regulators to catch up, for voices to be heard, for advocacy groups to appear. Multiple interests are going to be voiced, and then at the end of the day, politicians are going to respond either to James' point, to what is most interesting to them, or to my point, whatever their constituents are manifesting that they want. But yeah, I think to wrap up this topic in the crypto regulation space, to me this represents two things. First, it represents that crypto has grown to such a point in which it has become a stage for political debate, and I think that's massive. I think this is showing that people in the US care about crypto, and there is interest, there's money behind it, there is people who are passionate about this, multiple advocacy groups doing great work at multiple levels of government, trying to pass better crypto regulation that enables innovation to stay in the US. So that's one thing. The second point, though, is I think crypto still has a lot of work to do in the court of public opinion to clean its name or to continue to show that it's a legitimate alternative to not only financial systems, but many of the systems that we keep these days. I think crypto, by the large population, is still seen largely as a purely speculative asset with very little merit to the technology behind it. I think a lot of people are very scarred by 2021, FTX, and all the scandals, Stellar Luna, and so on of the 2021 cycles. I think there's still a lot of work to do from the technology standpoint, building consumer applications that are good, better, and more equitable, I guess you could say. So those are my two takes. Any final comments here, or can we move on to the next topic?
No, let's talk about something Brendan cares about.
Let's talk about San Francisco. Before we got Brendan to fall asleep here.
Then we can move on to the next one, because no, I'm kidding. I love San Francisco.
So I think this was unexpected, and I'm just bringing this up because apparently this was a really big point of contention, and there were multiple layers to this. So I was in San Francisco last week. We were looking for office space for Adon.
We both were.
Yeah. Brandon, I waved you past on the plane. You're coming in when I was heading out. But I took a walk. I had dinner with somebody, and I was walking back to my hotel from that dinner, and I walked through Market Street, kind of around the Tenderloin area, and it was very sketchy. Maybe kind of what I said here, that it was by far the worst walk of my life. Maybe I was a little bit, it was a bit of hyperbole, but it was really, really bad. Like, it compared and felt worse to a lot of the really sketchy areas that I've seen growing up in Brazil and Colombia. To my utmost surprise, this tweet went stupidly viral. It had like 43 million views. Elon Musk retweeted it. And it really became this like point of contention here of like, just showing me that what's happening in San Francisco is like a lot of people are passionate about the city. A lot of people love the city. A lot of people love what it represents, what it stands for. But what I want to propose here as a topic of discussion is not just necessarily San Francisco and the drug problem and homelessness situation in San Francisco, but I guess it's more at a high level. How did that happen in a lot of the cities in the West Coast, and what are some of the solutions here that could be found? And maybe let's just start, Brendan. What was your impression of your time in San Francisco? Did you also see the same things that I saw, or it wasn't as bad for you?
I stayed out of those neighborhoods after you gave me the warning. No, it was bad. I think we've gone a few times now to like that where maybe we're thick skin and we're used to it. It is an interesting scenario that you just like play back and you're like one of the richest states in one of the richest countries in a city that has just crushed so many amazing companies and put out so much interesting work in some of the brightest individuals of our generation. And like, they can't figure out like this one thing. There's cars driving around without drivers and people with like $1 million salaries at 25 to work on AI. Like, it's wild. And then like right up the street, you see someone like naked on drugs doing something like heinous, and you're like, oh my gosh. It's really sad. I think it also kind of begs the question of what did remote work do to cities like that? I think this is also kind of I think that has a lot to do with it. Like, I know cities that have like over time been the epicenter of talent because in person is how work gets done, and that kind of got undone for a while. I think that probably had a huge implication on that city in particular. But yeah, I don't have too much else to say. Sad.
Any thoughts here?
I don't know. I try to not get like political more publicly. And in any case, I'm not an American citizen, so like I don't have a chicken in this fight. I'm trying to become an American citizen, so maybe I do have a chicken in the fight. But I don't know. I think it's just fundamentally broken. I wish I was smart enough to come up with the solution. I'm just not. But I think all over the world, whatever there's like incredible success, because America is the richest country that's ever been. It's the most successful, civilization really that's ever been. But with that, you'll always have people that get left behind, and you have to have very strong focus on making sure nobody gets left behind to do anything about it. But obviously, when in this race, like that just hasn't been the focus, and you're seeing the results of it.
You know what part of it feels like is a lack of community. Like, at least when you think of the people that live in San Francisco, they're tied to a company, and then sometimes a family. Depends if you're what band you are at Google, if you've decided to start a family. And I think a lot of other cities, your job is second to your family and your community, and because of that, like, everyone brings everyone up. I think San Francisco is one of those few places where I don't know many people that are like walking around talking about how they live in Hayes Valley, and they're like, man, this is my city, my neighborhood. When I'm in New York, that's all you hear is like they tell you about Brooklyn and how they grew up there in Queens, and there's that sense of community. And New York has its issues, but even when I think of Texas or Florida, there's a huge sense of a community in these areas. And I bet that has something to do with the policies that then come to be, and furthermore how the companies treat the local population.
Actually, I think that's a really good point, because I do. So, okay, two things here. I do think there's a sense of community in places like the Bay, but I think those people are not in tech, or a lot of those people seem like they were just like displaced and taken away from their homes that they've been at for many generations. And I kind of saw this too, and I've seen this in the public discourse around some of the issues with cities in the West Coast. And I really saw this in all of the replies and the bombarding of notifications that I got because of this tweet. I think most of the comments related to this tweet kind of fell in two categories. So on one side, it was tech people who, as of recently, have been a lot more libertarian leaning, if not outright conservative leaning. A lot of tech people blaming the government. I think, frankly, that was even part of Elon's retweet, basically blaming the policies and philosophy that caused this. And then on the other extreme, I saw a lot of leftist-leaning people who had been in San Francisco for a very long time, like multi-generation, born and raised in California, blaming tech, saying this is tech's fault. Tech came, drove prices all the way up, and it's impossible to live here. You guys gentrified the entire city. And it was really interesting to see the tension between those two groups. It was really interesting to see the tension between all the tech people blaming just the left government and all of the people who grew up in the space who were already left-leaning blaming the tech guys. And of course, in kind of what I said as a postmortem to the tweet, I think this is a complex issue. I think there's no just one answer. I think definitely extremely left-leaning policies played a role. Definitely think gentrification played a role. Definitely, I mean, you also can't overlook the core problem itself, which is drug addiction, and then the epidemic of the epidemic of fentanyl that is going through in the U.S. right now. Right, you can't overlook any of those things. But similarly, I think the solution is going to require collaboration between the two groups. And if there's something that I left or that I learned from that tweet, is that those two groups, those natives to the city, left-leaning people, are progressively becoming more antagonists to those building tech. And you see it too, and also in the crypto narrative that we were just discussing too. All of the people working in the technology are leaning more libertarian or leaning more conservative. A lot of the people who are more left-leaning are going anti-tech, anti-financing, and so on. And a lot of the solutions, not just in policy, but also like at the very ground level, require a collaboration of both groups, because these are complex issues, and pointing fingers at each other doesn't solve the problem, I guess.
Yeah, I think this simple solutions are only good for campaign posters. There obviously are no simple solutions to this, right? And so they might sound good as a clickbait, video clip or whatever, but in order to solve any of these problems, no matter what the problem is, you need a lot of collaboration, a lot of people. And the more complex, the more difficult the problem, the more collaboration you need. That's just like 101 of like solving problems. So I think until we get to the point where people can disagree with each other but still find common ground towards the solution, we're not going to solve any of these problems. And this is what's causing wars all over the world. This is causing this like ability for you to stay within your group and live your entire life with that perspective and never give any space to any other perspective. Like that ability of humans and that ability that frankly tech has given us is a big reason for the problem.
Let me just be super clear, kind of like to wrap up this topic and go on to our next and last topic. I love San Francisco. I think the city is amazing. The people living there are amazing. The city itself, like the culture of the city, even if you take away tech, is also beautiful. I love what San Francisco stands for from a culture and tech standpoint. But it's crazy to see the contrasts that the city are going through right now. I think like I hadn't been in San Francisco in a few years, and I went to explore the AI community to find a space for our company, and the amount of innovation and desire to build the future happening right now amongst tech circles in San Francisco is inspiring, contagious, and it's just genuinely mind blowing. But at the same time, I had never seen the city so bad. The amount of poverty and suffering is also really sad to see. So, I think there's a problem that is kind of like happening everywhere in the country, but I think San Francisco just epitomizes
on it.
Yeah,
when you're in the epicenter of social media, it's easy for like to look like the worst place. You probably go to certain parts of West Virginia or Ohio where they also have a fentanyl problem. You probably see that 100%. Just as bad. It's just no one's tweeting about it.
100%. Okay, let us move on here to the last topic, and maybe this is just gonna be a rapid fire because we're already kind of at the 45-minute mark here. But two big things that happened since we last recorded. OpenAI, very very strategically timed, announced their latest model and their latest user interface and latest product, I guess you could say. GPT-4o, O standing for Omni. Everybody saw it in the news, right? It's a multimodal agent that can interact in a very natural way, voice, video, images, and it's a great product. A day after, maybe 2 days after, Google had its really big showcasing event of the year called Google I/O. They announced a million things. Some of the highlights, I guess, include Gemini Flash, Gemini in Search, and a few other things that were announced throughout the process. It was pretty much an AI showcase, right? Not just like a Google showcase, but like a lot of the AI things Google are doing. Very quickly here, Brendan, your thoughts?
And before you stop, Microsoft just did theirs yesterday?
Okay.
2 days ago.
Okay. Yeah.
Okay, I missed that one. Okay.
Yeah, so that's like those are the three enterprise juggernauts right now.
So what did you think, Brendan? Which one was the most impressive demo for you?
Microsoft.
Really? Like on the surface, like the edge, what was impressive about it?
I think they've thought more deeply. I actually hate that phrase. They showed a clear picture of like a new reality. The other showcases, you could kind of like imagine those if you just sat down for 20 seconds and were like, the models are going to be faster, better, longer context. It was pretty straightforward. Impressive feats by all means. I don't want to discount that, but the fact that they were going to do multimodal, they effectively had done it. It just didn't have like a certain inclination for the voice from OpenAI. It's a faster, cheaper model. That's to be expected as well. And then Google similarly just rolled out 10 more models. Still hard to log into their developer platform and use any of them, but hey, they're figuring it out along the way. They actually just poached the OpenAI head of developer relations, so maybe they'll figure some stuff out. But Microsoft felt like different. They came in and said, this whole model thing, that was last year. We're now talking agents and we're talking hardware. Here's how our hardware is going to match up with agents. What does that actually mean? That means it's faster, but it also means that the hardware has a listening thing built in. It has perfect recall across your enterprise or your computer. It can be in your Slack with you. It can be in, not Slack, what is their equivalent? Microsoft Teams, all their Microsoft equivalents. I think they just painted a much clearer picture of like a cohesive vision for the PCs as well as the enterprise products that they have. So
it also to me kind of felt like especially for Google, it felt like features instead of like a real like product. And
Yep.
Microsoft felt like a product, right? Like this is like like shifting the how we think about a laptop, and the Google search and adding Gemini into it. I was like, yeah, okay. People were already doing that with
Everyone's
other
like,
search
oh,
engines.
perplexity killer.
Perplexity killer. Yeah, I have an interesting take. Go ahead, Brandon. Finish up.
No, please.
I have an interesting take here, because a lot of particularly the OpenAI and some of the stuff that I did see from Microsoft, with the agents and the native integrations with a lot of its products, because of the context and a lot of the world that I've been exploring at the data layer, I am seeing a lot of those deployments as, I wouldn't necessarily say pretext, but as a Trojan horse just to capture a lot more data and capture a lot more data that is not easily available today. So, and I think this is like clear, at least for me, it was really, really clear with GPT-4o. GPT-4o is okay, it's a cool product, yeah, but like I don't think it comes from like the kindness of their heart of saying everybody now has access to GPT-4. It's mainly a play to collect a lot of data, particularly multimodal real-world data, audio, video, photos, all the data that is extremely valuable, even far more valuable than text-only data. And I think those companies are starting to deploy their own mechanisms to go after them. And you can even see the same, you can even make the same argument from Microsoft and a lot of their on-edge agents as well.
Mm-hmm. Okay.
Yeah, I think the browser stuff was impressive from OpenAI. The fact, or not the browser stuff. I'm alluding to what I think is going to come. They have a desktop app, and desktop apps allow you to capture different functionality on the computer, so you can control the UI in a way that a lot of times you miss on the browser. So I think that's like a pretty big leap. They're just setting themselves up to control the device without owning the device like Microsoft does.
Yeah, I see that too.
So rapid fire question, Brendan, from the Magnificent Seven, the seven, largest, who would you put $100 in as an AI investment?
Google.
Okay. What about you, Sam?
Google. I'm biased, but Google. Google is incredible, dude. And they are, a lot of people call Google
Athena,
dead.
actually, and then Google.
Yeah. Athena, then Athena, then Google. I think a lot of people called Google dead way too early. I think definitely Google was more reactive on this than they would have liked to be. But dude, the talent is unmatched, and then the distribution capacity is unmatched, and the ability to execute is also, I think, unmatched from Google when they actually feel like they need to. So definitely Google.
Okay.
You?
Yeah, I think they have the. I think Microsoft isn't allowed the data that Microsoft collects. You can't combine and train a model, and I think you can if you're Google, because you basically probably wrote in your terms and conditions 20 years ago, search terms, YouTube. Like it's harder for a class action to come from 100,000 people than it is from like Pfizer suing Microsoft for training their data on WeWork, like whatever that might be. So I think it's just an easier roll up of consumer data on hardware that they've invested in, on compute that they have, and yeah, they have a nice piggy bank.
It's a data and compute game. Compute is pretty much the same across all of the big seven. It's a data game then. And who has the best data tools? Who's known for being a data company? Google. So my bet goes there. I think they're sitting in the biggest moat.
So I'll adjust that a little bit. So I think it's a data and distribution game. So when you go up against companies that can spend $1 billion and then give out the software for free, you have to have existing distribution to be able to charge for it incrementally. So Google can charge incrementally for a lot of these things. The same feature an individual small company can charge for. And so I think the winners are going to be determined obviously by the data, but also with how much existing distribution you have.
Yeah, I agree. All right, let us wrap here. 50 minutes. Great episode, guys. Great chatting. And we will see you all next in 2 weeks, I guess, for episode number 263 of the Intersection.
Episode 17.
Podcast.
We're at 16
17,
right
right.
now. 17. Yeah.
All right.
Good.
Cheers, guys.